What's up, trader? Trading gold was really hard for me. In fact, I made my biggest loss in trading gold when I started. There was a time when I became obsessed on understanding how the gold market moves, and I spent hours, days, months of time in front of chart to see how this market behaves. Now, from that experience, today I'm gonna reveal one of the biggest secret of trading gold, how you can apply this in your trading, and I'll show you exactly how we have closed quite a few profitable trade on gold using the same secret. Now, before I begin this incredible gold trading strategy, make sure guys you smash the like button, hit that subscribe button if you haven't done yet. This is Forex Wizard from Forex Trading Wizard Academy. Without further delay, let's get started. Okay guys, so before I begin this strategy, this is the trade that recently we have closed in our Forex Trading Wizard Academy using the same strategy along with many other trades that we have closed in the past. So I'm gonna now explain one by one how you can use this same strategy to trade gold every day. Okay guys, so let's understand this strategy here. Now first of all, I'll discuss the trade that we have closed. It will be easier to understand in that way. So first, let's replay this chart. This is 4-hour time frame, as we will be applying this strategy on the 4-hour time frame. Now this is the candle that has opened here, okay, and then the price has gone up, has come back down, and then has come back here again, closed in this level. Now when this candle form, there is a lot of ups and down happen during the lifetime of this candle, and this is the key points of this strategy. As I mentioned, that when you look at the past candles, these candles are dead candles. There is a lot of things happen during the lifetime of these candles that you cannot understand when the candle is closed, and that is why this strategy will depend on the live market data. That is why it is so unique. Now what is the main theme of this strategy is that when you see a candle open, okay, and then started to drop, let's say it has a big drop, all right. Now when the price drop to this level at some point, if I replay this chart slowly, then you will see that there was a time when in fact the price has come to this level as well. That time it was a full red body candle. So basically that this is a bearish candle. Now especially on gold, when you see that in this 4-hour candle, before 1 hour of this candle close, if you see that the price has crossed all this opening and closing above and has broken even the high of this candle before 1 hour of this candle close, then highly likely that this price will jump back down again. I'm repeating again. So initially when this candle opened, what we have seen that the price after going up little bit has come back down to this level, right, in the first 3 hours. And then what happened, the price has immediately has gone up, almost has broken all this level, created almost a green candle, and then the price has broken even the high of the session, created a completely overextended market, and from that level the price has dropped immediately, and that is where we will be entering. Now how do you know that this happens? As I mentioned, that when the candle close, it is not possible for you to understand because the candle is closed. First, let's find out by using the lower time frame, then you will understand actually what I mean by this. Now I created a box around this candle. Let's jump on to 15 minutes time frame. Now this is what exactly happened. You can see that the candle probably closed open around this zone. You can see with this bearish candle, okay, and then see what happened. There is a big drop to this level. This is the low has been created, and then the price has gone up with this candle. You can see that exactly almost has broken all this resistance, including the opening and closing of the candle. Now with that opening and closing of the candle, what the price did, that the price grabbed liquidity and then immediately has come back down, and this is enough for us to take enough profit, because as you can see, when we enter a trade from here, when you saw that all this level has broken on the 4 hour, if you look at, go back again 4 hour, what you see that when you see the price first came here and then has gone back up, closed, has broken all this level, you know that the market is overextended. 1 hour, around 1 hour or 1.5 an hour remaining for this candle to be closed, and because it has already made a bearish movement, highly likely that this price will go drop again, and you need a very high risk to reward ratio or high probability trade setup on this one, and a stop loss above this high can give you an incredibly powerful trade. Now if you look at again 15 minutes chart, you can see that if you enter the trade after breaking the opening and closing of the 4 hour, like when the 4 hour candle started to open, when you see the price has broken that level and you know that this price is likely to drop, if you sell from this level, stop loss above this high, that's a huge high probability trade setup. Now let's jump on to another example exactly in the same way. Okay guys, so let's look at this example exactly in the same way, and also this is the trade that even I was on YouTube live, we opened this trade and closed with a huge profit. Now the similar strategy has been applied on this strategy. Now keep in mind guys that to apply this strategy, you first need to be sure about the direction of the candle. That means that when you see, let's say this one, during the lifetime of this candle, there was a lot of fluctuation in this candle. But when you see that primarily the price has created an impulse from this, as you can see, the trend is up in this market, and this is a very important level of support on gold. Okay, you can see this is a dynamic support, and the price has broken out of this support with this long bullish candle. That means that you are sure about the direction that the price will go up. Now when you are sure about the direction, the next thing you need to wait for the price to come back down well below the level of support, or especially when the price break the opening and closing zone and then create an overextended market where you can go long based on the time frame that you are looking at. Now what you see, this is the candle. Let's do the same thing. Let's create a box in this level from opening and closing. And also let's draw a level on this one to see in fact how it did. Now if you go to the 15 minutes time frame, you see exactly what happened. First of all, from here around this zone, the candle was open and then came back down, has gone up, created this big move to the upside. So with that movement, you know that this is a bullish market and the price is likely to go up. Now the next thing is we need to wait for the price to come back. Now this is the dotted line where you can see this is the opening and closing of this candle. When the price has broken that level, you know that this market is overextended. As this is a bull market, highly likely that this price will go up, and this is where we have bought even in this YouTube live. And with that long position, keeping the stop loss below this low, we had a very good trade, and easily you can achieve any risk to reward ratio trade on this one. And as you can see, afterwards the price aggressively started to push to the upside. Incredible strategy. Let me give you another example so that you understand it clearly. Okay guys, so the same way you can see that this is also a 4-hour candle on gold, and as what you see that this candle, after this big impulsive move to the upside, the prices came back down, created this candle. All right, so when this candle formed, you can see the price open here, has come back down, and then has gone up again, has come back down. So when the price has come back down during the lifetime of this candle. Now if you draw a box and go to the 15 minutes time frame, you will see exactly how the price has performed during this lifetime. Now you see that the price has opened here and then has created this impulsive move to the upside, and then the price created a series of lower high. And if you draw a line on the opening and closing of this candle, you can see clearly that the last moment the price has broken the opening and closing of this zone. The previous, like in the last 1 hour, is the key points that we discussed. The price has come back to the same level and then created this push to the upside, and afterwards you can see clearly that the price in fact has gone up a lot to the upside. Now this simple, easy to understand strategy will change the way you trade. So before I finish, let's recap the strategy we will be using on gold on the 4-hour time frame. The key points here is that first of all, you need to know the direction of the market. So when you see a 4-hour candle has opened either bullish or bearish, and you see the trend is, let's say, down, and a candle closed in an important area, created a strong movement to the downside, and then the price has gone back up again just before 1 hour or 1.5 hours earlier. The price has broken the opening and closing zone and created an overextended market. When you are sure about the direction, that is where we will be placing directly by market sell order and keeping stop loss in a narrow zone and take profit along the length of this candle, so that when the price will come back down again, it will hit the profit target. Simple, easiest strategy. I sincerely believe that, guys, this video was helpful to you. If you have any question, don't hesitate to ask me. I do replay most of the comments. There is a comment section. You can leave a comment. And thank you very much. I'll see you soon in my next video.